Hello, everyone. Dr. Eames here. This time, I'd like to talk to you about philanthropic fundraising. Generally, a lot of the time, I think when we consider nonprofits, we also tend to think of fundraising um, because we're exposed to a lot of the promotional efforts in fundraising. We might get a direct mail solicitation asking us to give. We might get an email from a nonprofit organization that's working in partnership with our company. Like often an example might be United Way that works in partnerships with a lot of larger organizations. We might hear a plea on the radio or see a TV commercial asking for donations or drawing attention to some urgent cause and trying to engage us with a website number or to click on or a phone number, an 800 number. We could see it on Facebook, LinkedIn, any of these social media platforms and so forth. So certainly we're aware as consumers that giving is wanted by organizations out there and by probably a lot of organizations. So the importance of gifts to nonprofits certainly can't be underestimated. Um, Charitable or philanthropic giving is an important source of revenue for many nonprofits. Um, Although the relative importance of the giving will vary among subsectors in the nonprofit sector. Uh, but what we're talking about is charitable gifts, which are generally smaller, philanthropic gifts, which are larger. These are counted on and depended upon as sources of revenue. Now, we can look at some nonprofits as having a low reliance on this sort of giving. In particular, we have to note that it would be health services organizations of all types, those in the healthcare industry. They are not looking for donations as much because they're getting most of their remuneration for goods and services produced from government programs like Medicaid and Medicare and so forth. So their reliance on the importance of gifts in the form of donations is low. We can talk about a medium reliance on these gifts. These good examples here would include educational institutions and then civic groups of all types. Chambers of commerce, of course, but cities themselves, social fraternal organization of all types that are out there. They have a medium reliance on it, but these organizations, in particular, all of them have a variety of ways to produce some revenue streams. When they certainly don't want to discount gifts, they're going to take them, they're going to solicit them. So their reliance is probably somewhere in the middle and would be considered medium. When it comes to a high reliance on gifts, we have to say definitely this is religious organizations are the number one example of this, and then also followed by human service organizations, not necessarily healthcare, but human service organizations that really provide services that helps the general public in some really notable way. And that might be something like a food pantry or something. They really rely on gifts of all types, not just monetary gifts in particular, but also material gifts of product that they can use to further their mission. So we can also have private giving, which can help you meet some organizational, priorities as a nonprofit. And this sort of money can be used towards your core operations or for capacity building or new facilities or improved facilities, or to cover the costs of new programs and initiatives that you might have that you can't find a grant for and really have reverse cash flow where they lack paying clients. So quite often what the nonprofits do, of course, you remember, is that they provide goods and services in many contexts, and yet no revenue comes back in return. And so the reliance here puts those sorts of organizations in very high reliance on gifts. But private giving can alleviate some of that. So destinations for gifts, where are they going? Well, we have to define probably, make some distinctions here. Charity is giving to meet immediate human needs. It's smaller amounts of money, things that we can do right now to help someone in some small way. Philanthropy, on the other hand, um, this is giving uh, generally to develop an institution possibly that wants to serve human needs or enhance the human development in some way over the very long term. And so there is a difference between charity and philanthropy. Now, when it comes to the destinations, as you can see here, uh, certainly high reliance on gifts. Religious organizations, well, they are the highest recipient of such gifts. At over 1/3 of all gifts go to religious organizations at about 35%. Foundations, which are nonprofit organizations, they receive bigger amounts of money because quite often they're attacking broad issues, whether they're domestic or international. They are social and cultural issues. They are issues about the greater good, about the public good. And so foundations generally get nearly 15% of all gifts. And you can see education is following quite closely, pretty much with foundations. These are donations to colleges and universities, or bequests even to public school systems, if such a thing would occur. And then you can see a variety of other areas where these gifts go in smaller amounts. They go to human services organizations of all types. Some healthcare organizations get them, all sorts of things. A smaller amount goes to arts and culture, which is really at the bottom of the list for receiving gifts. And also the environment is included in that category that gets the least number of gifts. Foundation giving through the years. Well, you can see this chart here, which is about 10 years old, which is still pretty good information. We would have to say that the figures have changed a little bit. They've increased, but the trend is certainly going to remain the same. And you can see here that foundation giving. So foundations, of course, nonprofits, larger, dealing with often larger issues. They're dealing with philanthropy versus being charitable, like most small charities. 2001, about $30 billion or so estimated, and which I think is fairly accurate, about $51 billion in 2012. And so what we see, the trend is that foundations and the nonprofit sector in general, the giving has been increasing as a general trend over time. Slight dips, not significant, more of a plateau, things leveling out, certainly. And I would think that the pandemic certainly has had an impact on this, and it will be interesting to see some current figures on giving and so forth since 2020. So our definitions and distinctions, I talked about the differences between charity and philanthropy. When it comes to fundraising, these are activities that nonprofits undertake with the goal of eliciting some charitable philanthropic giving, a gift, in other words. When it comes to development, this is one of the processes that nonprofits go through for fundraising, but it's a comprehensive approach to fundraising. And it's really development implies that it is long-term growth for the organization of some type. Institutional advancement is about fundraising also and development, along with all the things that support it, such as your communications activities, your marketing promotions, and the other programs that you have in place to engage with your constituents and so forth, and your stakeholders as well. So you can see here some prominent personalities generally that are involved in philanthropic giving because they have the means to do so. And so generally these various individuals have given or great sums to donations, gifts to foundations and so forth, or established them outright. Motivations for giving. Well, we start talking about corporate philanthropy. The type of giving that we see here, it's direct gifts. So there's a cash outlay. Um, and this is a little different versus a corporate foundation. Foundation, a nonprofit, certainly can incorporate, and a foundation quite often is incorporated to enjoy those tax benefits, and also for legal protections in particular. The cash, certainly the biggest tax benefits come from being an established nonprofit organization. Um, the forms of giving, the direct gifts, cash gifts or gifts in kind, we're really talking about, it could be an outright outlay of capital. It could also be property. It could be some asset that can be used for something, a machine. It could be the use of a building, or the use, the use of some services in something that requires the organization to provide their own personnel and expertise alongside in partnership with the nonprofit. These are all different forms of giving we see that are recognized as corporate philanthropy. And then certainly the biggest would be partnerships, strategic alliances working directly with a nonprofit. Um, we're really talking about enlightened self-interest here. It's behavior at the corporate level that's based on awareness, or their perception of what the awareness of the public interest is. And hopefully that would mean the public interest of all individuals and groups. Philanthropy is certainly quite often strategic. Um, People with the means to provide a philanthropic gift are going to spend time investigating. They can invest their money or their capital in different places in different ways. And so they're going to take a look and ways to weigh the feasibility and the possibilities of success and so forth of the venture itself. They want to see what the results might be like and envision how society or future may be changed in some way by this bequest or gift. So philanthropy, to those who can perform it, really is a tool for achieving a vision. And so quite often foundations are established by people who have the means, and they have their reasons for doing it. Foundations get tax exempt status. This is very helpful to them, certainly in operations. There are some rules about having a foundation. There's a minimum giving requirement. So there are some certain requirements, thresholds you have to meet in the size of the gift. It depends on the type of activity you're going to do, and the government would be glad to talk to you about it if you start to go through that process. And then this could be done, this foundation giving could be done by a corporation. It could be done by individual. It could be done by a family business. It could be done by an independent foundation. So there is really no restriction on the sources of this sort of giving. The individual motivations for giving, well, we look at generational cohorts as one perspective to understand this. And you can see here nearly $150 billion annual contributions from various age groups, generational cohorts. You can see baby boomers have been the biggest givers over time, with not quite half. And some of the other generational cohorts there line up. There are differences, of course, in the size of these populations and their means to give and so forth. Baby boomers, up until recently, were the largest generational cohort, been slowly replaced by Gen Y, millennial group, and so forth. But really, it still has been historically that the boomers have been, over time, the largest givers of gifts and donations and so forth. So what are these motivations? Well, most of the time they're either altruistic, they come from within, or they're egoistic or egotistic in some way, what motivates people to give. Sometimes it's just an individual's nature to want to help others and improve the human condition. That would be altruistic. Sometimes individuals may want to obtain some benefit for themselves, which is not necessarily a negative thing. It's a positive thing. It's a normal human thing to want some recognition, some social position, um, some measure of control or something. Some of these cross more over into egotistic sorts of motivations. We do find that there are many academic uh, viewpoints on this. There's been a lot of research in the area. There are a lot of different types of ways to classify people who do giving and so forth. Um, but it's a long list and it probably strays a little bit from what we're talking about. I think it suffices for us to know that there are these different types of personalities that we could apply labels to as a group to try and understand what is really motivating them and so forth. Um, and sometimes when we talk about a disposition for giving or something, uh, sometimes people have a family history of doing things. Sometimes they do it for reasons that are more emotional from milestone events that have happened to them in their life. There is a process for fundraising. Um, you identify why you need to do it, how much do you need to do accomplish the program or whatever it is that you're trying to establish or accomplish, and then develop that premise and how would you go about it. And then you start to think, well, a big part of this is really talking about individuals. Who are those people that would likely are already stakeholders or who would likely be reasonable candidates to become stakeholders? So you're finding those prospects and you're coming up with the criteria that qualifies them as a prospect to deal with, to engage with, in order to to get some gift at the end as the end result. So you do prospect research, of course. Prospect research is about cultivating prospects. Quite often, you develop a relationship before soliciting a gift. It's a very well researched process. It has a lot of identifiable steps, as you can see here. And rather than explain all the steps and all the details, I think it does suffice to say that it's a very logical process. And quite often, what we see is that it's handled by something called the moves management system. And this is really a software system. It's a process that the software uses. You input information about the prospect as you learn the information all over time. And the system helps you go through the steps of communication and contact and with what is appropriate and reasonable. And you move that prospective donor from cultivation to solicitation. So it's called moves. And these are the actions that an organization would take to bring in donors, to establish those relationships and renew contributions. Because your number one source of a donation or a gift in the future is an individual or group who has already given to you in the past. So once you do have a gift or something, you certainly have to be prompt about acknowledging it. Um, you have to acknowledge that you want to have these people donate to you again. So you maintain a relationship, you cultivate a good, solid relationship. Um, and so stewardship basically is talking about those activities and efforts that you make to keep your donor engaged and informed about what you're doing and your activities that reflect upon the fact that they've given you some funds or some gift of some type to help you accomplish your mission. So in effect, they feel like they are part of your efforts. Here it is in a nice graphic flow sheet of how you go about this. And something like this is all laid out for you in the moves management software. There's a variety of vendors that will have different product names and so forth. But it's easy to investigate, find that product, read the reviews certainly, and find out which one might be best for your organization. So you do go through something what's called a ladder of effectiveness. When it gets down to the end of this process, well, it's not really the end because you maintain relations, but soliciting the gift itself is not something you would do immediately. You certainly want to build up a relationship. The person who's the potential donor understands they're being cultivated. It's quite obvious, but they want to be cultivated, but they also want to be respected. And so therefore, they want you to engage in something that builds trust. They simply want to believe that what they're doing is something that is going to matter and that it's the right thing to do. So there are different ways that we could engage with people. And so this ladder of effectiveness that I mentioned is nothing more than these are the techniques or tools. These are in descending order of effectiveness. So the number one most effective way to talk to a person and solicit a gift is the personal way. It's a face-to-face meeting. And so you can do that one-on-one, which is best, or two people, but generally it's much less intimidating to meet someone face-to-face and talk to them. And remember, this will happen after you've already met them in the past, you've engaged with them, you've built a relationship of trust and so forth. Second to this in order would be a personal letter on a personal letterhead, of course. Or after a meeting with a person, you do a follow-up with the telephone. You don't call them first. You have that face-to-face meeting and you follow up with the telephone. Generally, you might make a phone call or you might follow that with a personal short letter. So the order doesn't matter as much as the promptness or the timing, but the phone call certainly depends on the context of the situation as well, and you will be able to determine that. So those may be equal in order what you choose to do first there, but certainly much more important than sending an email message that is much less formal. It is not as personal, or any of these others. These others are just basically tools and techniques. So a telemarketing call is certainly less effective and indeed has a negative reputation amongst consumers in general. And when we talk about the nonprofit sector, we're talking about clients. So telemarketing, soliciting for donations is probably not the way to go for a nonprofit. Fundraising events, earned income events, special events, sponsorships, those types of sales promotions are appropriate and much more effective, certainly for nonprofit organizations. You should certainly choose door-to-door canvassing last. Today, society is a little different on having how they may receive or perceive strangers coming to the door. It's probably just not the best way to go about something. And then certainly a big tool, though, even though it's listed here as number 10, it's certainly not as personal as face-to-face is media of advertising, which is telephone, radio, or certainly your social media and so forth on the internet. So there are a variety of fundraising pyramids out there. Most of them have a foundation of the occasional gifts, or depending on how their perspective is based on the type of prospects, their donors that are out there, all donors in this case. There are simply too many pyramids out there to talk about or say that one is better than the other or has all the truth in it. But it is suffice, I think, to say that these pyramids give us an idea of the size or frequency of these gifts, the amounts and so forth. So certainly a planned gift is something that you've cultivated over time. A major gift is certainly going to be much bigger than an occasional gift. An annual gift be something where you've got a loyal donor that has agreed to do this on a regular basis. Depending on how you look at it, each of those would be a different target segment and so forth. They're going to have different behaviors and different motivations for giving like they do. The pyramids are meant to be a tool to help us understand this. So here, another type, this one's from Dunlop. He's looking at the different types of gifts, really. There is criticism of them for the very reasons I've been talking about. There are so many of them. They all look at it from different perspectives. The labels change. Lots of academics have done research over time. And of course, it gets a little tiresome trying to sort it out. And you can see here the same sort of idea. When we really would like to go about getting some basic fundraising money, regardless, forgetting about the conceptual and the theoretical stuff about the types of gifts and all of that, we're really talking about doing marketing just like in the for-profit sector. We run not just a campaign, but a promotional campaign of some type. And so there are a variety of characteristics of promotional campaigns. They ought to have a high priority in your organization. Certainly in the marketing department, they would. They ought to have a specific goal in mind, a monetary goal. There should be a deadline set for the campaign. When does it start? When does it end in particular? And what are the milestones, if there are some along the way, or is it a certain one-time event that is fairly brief in that sense, if it's a day or it's a week or something like that? Are we able to raise a certain amount of money by the deadline? Have we properly defined the purposes of the campaign, of which the funds are being raised? And do we have the message that we want to communicate so that we'll be effective in delivering that message and getting the donations and having the campaign actually work? So have we thought about the levels of gift solicitation that the people we're thinking about will give to this campaign? What can they afford? What would they likely and reasonably want to give? And so there are many perspectives to look at this from. There are a variety of best practices like that out there that you can easily find when you get ready to put together a campaign. So if you look at something like what we see here, it's using a very simple image that conveys a message to just about anybody in America. We all know what a piggy bank is. We see the coin going in and so forth. And what do we see that is the biggest message that has red color in it in largest letters on this page at the top and the bottom? Well, first of all, we got 5 stars at the top. Most of the time, you don't see those 5 stars until you've seen that larger color in print first. But the 5 stars are there in red. And right beneath us in large print, in large black and red, with an exclamation point, help us help you. At the bottom, large red block with whited out letters with a big arrow pointing out that at that piggy bank saying donate now with an exclamation point. And it's got it down to a very small, reasonable amount for a lot of possible donors out there. Each $10 donation gets you an entry into a raffle. So that's a sales promotion. That a raffle is a chance to win something bigger and also to make yourself feel good by donating to the cause. This is really the characteristics of what would be considered an effective type of campaign. Now, you have to manage these campaigns. So you have to really do your planning. You have to make sure that during the campaign, you're keeping track, if it's that context of who's giving money, at what level, you're gathering that information, you're encouraging them to get on your newsletter so that you can contact them in the future, so that you can move them into your moves management system and so forth. So these are all types of advancement services. Your prospect research is considered an advancement type of service. And you manage the whole thing using our basic database technology of today with computer technology and the internet. You manage your prospects using the Move software, but you also do additional planning and scheduling and tracking. You develop strategies for overall programs and so forth. And you take a look at how you can involve your current clients in which might appeal to them. And so you can see that it's a real process and it takes effort and determination to see it through each time. You have to worry about how efficient you are, but certainly it's more important to be effective. Effective, of course, in business terms means that we achieve our goals. we accomplish our mission. So effectiveness always has to win out over efficiency. Efficiency helps us save money to do better in the end. It helps us beat the competition and gain market share and all of those things. So we need to walk that balance of achieving effectiveness and being as efficient as possible along the way. So there's always a little bit of debate about the costs of fundraising. There is always different ways to measure how you're doing. How many clients have you served? What is the return on the money you've spent for the number of clients, or what return have you seen on investment that you've made? There is no established criteria here that says this is the absolute best practice and way and how we ought to handle fundraising. There is some disagreement. Charity watchdog organizations generally agree that fundraising costs should not exceed 1/3 of the money that you receive in donations. That is a standard. It is generally accepted in the nonprofit sector. So about your costs for running an event, a fundraising something, a sponsorship, your costs shouldn't run more than 1/3 of what you expect to get back. The Supreme Court has had a variety of cases occasionally weighing in on the issue, and they said that it's not appropriate for the government to set a limit, a supreme limit for fundraising costs. And indeed, the submissions that nonprofit organizations make annually to watchdog organizations like guidestar.org, where they publish all the Form 990s that they receive, so that the nonprofits can show to the public that they're transparent and this is how much we've spent and this is how many people we've helped and so forth. So that's generally the substance of the debate about the fundraising itself. It is a little unfair from some viewpoints to put limits on fundraising costs, though, absolutely 1/3, perhaps because an organization faces tremendous competition in the nonprofit sector. And in the beginning, in particular, that competition is very fierce to deal with, to establish yourself, and to actually survive and so forth. So that's a problem with, from one perspective, on putting a limit on these fundraising, how much you really spend on it. And there's also the problem with determining what is the true total cost of fundraising. And even should we look at it like an expense, or should we look at it like how much is profits being generated and how many more clients has it enabled us to serve and complete our mission? So there are different ways that and attempts to measure effectiveness and efficiency that are used in this nonprofit sector, and they're the same ones used in the for-profit, really. You can look at cost per dollars raised. That might not be very fair because there is such a problem with reverse cash flow. In other words, so many nonprofits put out goods and services as their mission, and no money comes back from the client that they've just helped. So that's reverse cash flow. And so it's maybe not fair to say, measure them by how much they've spent and how much they got back in return. It might be better, for instance, to say, let's use return on investment, ROI. How much have we put into it? What have we gotten back in number of served, and how does that compare historically over time? Are we still solvent, and so forth? How there are different ways to measure and understand success. Certainly, part of our success, our efficiency, and our effectiveness is going to come from our staff itself and how accountable we are for the things we accomplish and how efficient we are in our processes. So there are problems saying that you want to assign an accountability factor to every staff member. For instance, they raised a certain amount of money compared to this person. That's probably not the way to go. Most nonprofits certainly work as a team. It's always a team effort. It's probably best to get away from individual performance statistics other than Are you doing your job duties and so forth properly and all of that? But you should not use donations and money raised as particularly the only performance indicator or the main performance indicator. So look for what works for your particular nonprofit context and those alternative methods for evaluating staff performance and accountability. And always keep in mind that generally the context is one of a team effort. Now, compensation is always a topic of debate and discussion in the nonprofit sector. Um, so incentive-based compensation, that may not be the way to go. Salaries usually work for permanent staff. But depends on the context and the size of your nonprofit organization and so forth. It would certainly be an unethical practice to base compensation based on percentage of gifts. Your staff should not be considered salesmen in the sense that they're treated that way and they're rewarded in compensation with a base salary based on performance and so forth of quotas and so forth, because that's much more of a sales perspective. That's not appropriate in this sector. Finally, I'd like to just close this up with talking about some basic ethical concerns when it comes to fundraiser behavior. Um, don't do anything or say anything that is misleading or dishonest in its representation. Simply tell the truth, represent the facts like they exist. Um, Never use your donor relationships for your personal benefit or your personal agenda. Nonprofit is there to serve a mission of some charitable objective and so forth. When it comes to donor behavior, uh, never accept any funds that you suspect are illegally obtained. Uh, that's illegal. If you know it, it's illegal to accept fraudulent money. Um, don't accept a gift from a company or organization or an individual that makes a product that knows it's harmful or you know it's harmful or the public at large thinks it's harmful. Never accept a gift from an individual or a company with an unsavory reputation in general. All of these things are simple, common, good business sense. They're reasonable and they're best practices, regardless of sector. But particularly, we're talking about donors here. And so you cannot take money or funds from these dubious sources. And then be very careful when it comes to restricted gifts. Restricted gifts generally are larger. Um, there's always strings attached in a larger gift. The donor generally wants something for their own agenda in some way. Maybe they want to tweak your idea or your mission in some way. They maybe want some regular reporting requirements. They may want you to agree, even contractually possibly, to do certain things. They want some control. You should always avoid these relationships, regardless of your financial situation. It's never good to give up your control and why you establish a nonprofit in the first place. If you feel you need to expand, you don't have the means and you don't see a future for that, you always have the possibility to seek out competitors doing what you're doing, who may be in a similar situation, but consider merging and so forth. There are other things you can do than accepting these sorts of restrictive gifts. And finally, when you do receive gifts, whether they're charitable or particularly philanthropic, but even when they're charitable, of course, you respect the privacy of your donors and your prospects. And certainly the field of prospect research has growing sophistication. Software is improving all the time. There are a lot of competitive products out there. And be careful about the creation and distribution of donor profiles. Certainly do not offer your own donor profile as a mailing list. You have the option to sell that if you wish. It's probably not considered an ethical or best practice in the nonprofit sector. And you may be able to purchase these lists. I would be very careful of them, and you should really question the ethical stance of a list of donor prospects, because that list shouldn't exist if it came from your competitors in the nonprofit sector. They should be acting ethically just like you would be, respecting privacy of contact information and so forth. Um, and then certainly keep your reports and your information as proprietary as possible within the organization from your donor visits, and don't make anecdotal referrals about your donors in conversations, particularly with competitors, but to the public at large. Really, everything that goes on between you and your donors and the research you do should be completely kept confidential. Okay, folks, that's all I've got for this time. I'll talk to you again soon.